Yes. Good afternoon, good morning, good evening, wherever you are. It is October 10th. It is a tantalizing, terrific Tuesday. Glad to be here. Glad to be in the place, in the space to educate you. Of course, that's what I do, right? My name is Toria Howard. I am an educator, but I'm also a real estate professional. So it's Real Estate Tuesday. So let's talk about it. We're talking about real estate today. I also do financial literacy, credit repair, and business funding. So, how my hair look today, y'all? You know, I, I love wearing my natural hair, but I work out like crazy. So, my new thing is, Fit Investor. That's my new. I'm going in with my new um, brand. Let me wipe my camera off. It seems. I'm going into my new brand and Fit Investor. So, what up, Willard? What up, though, Willard? We still haven't got on the phone. Like, we need to talk because I know it's been a minute. But I'm coming live from the classroom, talking about real estate today. Put your questions in the comments section. Let me know if you have any questions about real estate, investing, home ownership, all of that. Um, and we both bad with the phone. We got to get better, Willard. Um, let me know. We want to know about. We talking about banks today. What the bank? We talking about banks today. So drop a one in the comments if you are watching this live. Drop a two if you're new to my live, and drop a three if you are watching the replay. And I really appreciate it. Share this information. Share the video with amongst others who want this information. We're talking about banks today. Um, it came up to me because a lot of people choose to use banks that they are most familiar with, and there are brand names and they are well known and things like that, but sometimes that is not the best choice, right? So let's talk about some of the we're going to talk about some of the banks. I'm going to talk about some in Michigan because I am in Michigan right now. Some in Tennessee, kind of similar as well. And because I'm based out of Michigan and I do real estate still in Tennessee. So shout out to all my Memphis people, and what up though to all my Detroit people. So I want to just have this discussion about banks and how to choose banks and how to have a proper relationship with banks, right? And a lot of people don't think that. Let me say this first and foremost in the home buying process, before you even get into the process, you have to know who you want to choose as a bank as well. Um, a lot of people bank at multiple banks, and that's good. You should never put all your eggs in one basket, as they say. And you know, a lot of people, tend to go with, the names that they know: Wells Fargo, Bank of America, Chase, some of the other ones, that are most popular. But some of the things that um, you need to understand is sometimes they don't have the best programs or the best rates. So it's good to shop around. And I know sometimes it can be a little daunting. And I'm not talking about shopping around to the point where you're giving everybody your information. No, you call, you get a relationship, and you ask questions to the mortgage people, the mortgage lenders, and all those people that are a part of, your process before you choose a bank. You have to have a relationship. Find out, go. It's always good to go in person to ask these questions. I mean, you can ask over the phone, but you want a personal relationship with, because it's the mortgage lender and you have the underwriter. Now, if you can meet the underwriter, you're doing something great, you're doing something grand. But a lot of times you don't see those people, but you can get a chance to, get to know them as well if you get that relationship in there. So one of the things I always suggest is go inside the bank, whichever bank it is, multiple banks, to see, who's there. Sometimes you might not even like the person the way they dress, you know what I'm saying? So, you know, get a feel energy, with the person. Be personal. I know, a lot of times, nowadays, because everything is online, because of COVID, people don't want to be around people. But when you're talking about one of the biggest investments of your life, you need to go in person. and meet these people, right? So, find out who these people are, have a conversation with them, know what their, favorite things are, notice what's on their desk, what they're into, if they got into a sports team and all of that. You know, it's like courting, right? As the old people say, it's like dating. You want to, have a relationship with your mortgage lender because they are the ones that are going to make or break your deal, your investment, your home ownership dreams. So you want to make sure that you have a relationship with those people. So go inside the bank, you know, see who these people are, sit down, have a conversation with them, know about, their, get a little personal, because something might trigger them one day that could be going on in their life that could make your life a little difficult. So you have to make sure that, you are dealing with somebody that are, even keel on their emotions, not going to take anything personally. So you want to have a relationship with these people face to face. That's just my advice. Now you can do it over the phone too, but for me, and I advise my clients, it's always good to be in person, right? Secondly, you want to ask questions. First and foremost, you want to know how many loans have they serviced, what programs do they have? Because if you're a first-time home buyer, there's a plethora of programs that are out there, from conventional to FHA to USDA, VA. If you're a veteran, shout out to the veterans. All types of different loan programs that you can get into, but you need to know the different facets of those different programs and see which one works for you. Don't let them tell you which one is best for you. You know which one is best, because some of them are based on income, some of them are based off of, where you are planning on living, because like USDA, um, and some FHA loans, well, I should say FHA loans have, sometimes they have it, well, some banks have it where you can only live in a certain geographical area. So you need to know these things, and you have conventional, all these different loan products. Know the loan products, have them explain the loan products to you in full. Ask every single question. Read the fine print on every single one that they bring to you. Let you see the paperwork. You want to see it in writing. Don't let them just tell it that you want to see it, right? So you want to know the fine print. If there's mortgage insurance, the PMI, you want to know all of those things. What the minimum credit score is. What you're going to need for your credit report. What you need for your credit report to look like. Usually, a lot of banks will accept a minimum of 4 trade lines, and they have to be a mix. So you need to have, revolving and installment. Revolving and credit cards, installments are like personal loans, your mortgage, your auto loans, um, those type of things are installments. So you have to know what they expect on your credit report, because your credit report, your credit score matters. That's going to start the conversation. But your credit report and what's on there is what's going to continue the conversation, what's going to open the door to you. But you need to know what their loan products are, what their first time home buyer programs are, because a lot of different banks have a lot of a different variety. Something there might not work for you. What are their income requirements? A lot of them, you only can make up to a certain amount. And also, with those loans too, you only can buy a certain amount of house. Like, depending on your area, you can't go over probably 500,000 to 600,000. In some areas it's probably like 300,000 to 400,000. So you have to know those type of you know things. So asking them, how often do they contact their clients, how fast are they to getting back to you, their responses, how quickly does the underwriting process take, because some of them, I had a client who was with a bank. I'm not going to, discuss it, but they gave him more money than the first bank he went to. I'm glad, but it took him 2 weeks to turn over his paperwork to the the underwriter, and he almost lost his house because the mortgage lender took 2 weeks. It left in his email for 2 weeks. Didn't tell him he had to go and do a first time home buyer seminar for his program. None of that, right? So you have to understand and have a relationship with these people and understand how long does it take them to respond to emails, phone calls? Like, what is it? How on it are they? Because it can make or break your deal. Because a lot of times these buyers are not going to continue to wait for you. They only want 30 to 45 days. 45 days is like a long time because you have cash buyers that can turn around in 7 to 14 days. So you want to make sure that you're on it. But you have some banks and some relationships. If you have relationships with your lenders, like I do, you know, they'll turn it around in 14 days too. So, just from a home loan. So it just all depends. So you have to get, like I said, number one is knowing your banks, what they offer, going in person and having a personal relationship and sit down with those people to see whose energy you flexing with. Because if the energy is off, you need to go because they will break your deal. Asking them, what loan products they have, which one is best for you, which you should be knowledgeable of that, but you want to see how knowledgeable they are. So you need to know what your income is, what the medium home price is. You need to know, as far as the loans are concerned, because some of them have a medium home restrictions. Like you can't buy a home that's more than whatever, or sometimes population. Like USDA, in certain areas, I think it's 20 to 30,000 population is the highest that you can have in that one area, but it's a great loan program. Zero down a lot of times. So, you have to understand what they're telling you and know what's best for you, and have a real estate professional that understands too. You're gonna have to get real personal with these people. They're gonna have to dig all down the deep. So you need to dig down deep into them as well. Know them personally. See what bring them a little gift, a little chocolate, whatever you see that they like. If they like coffee, bring coffee to them. Whatever it is, find out what they like. You're gonna have to, like I said, you gotta date them a little bit, court them a little bit. Ask the questions. How long does it take them to get back to you? How long do they take to respond to emails? How long does the underwriting process take? How long will it take your paperwork to get to the underwriter? Right? So you have to be able to ask these questions. So let's talk about. So I just wanted to give you some of that knowledge on picking, the right people. Let me see. I thought I pulled this up. Uh, oh, so you need to know how these people work and how they're going to work for you, because they work for you. You don't work for them. So you have to understand that. Um, and make sure that you are pressing them and on them. So let's talk about some of these banks. So let's talk about Michigan first, because I'm in Michigan right now. So according to U.S. News, some of the best banks for first-time home buyers are NBKC Bank, New American Funding, First Horizon. Uh, Rocket Mortgage is like online, but whatever, you can do Rocket Mortgage, Farmers Bank of Kansas City, Veterans United Home Loans. You have PenFed Credit Union, PNC Bank, Chase is on there, U.S. Bank Mortgage, Navy Federal, AmeriSave, Guaranteed Rate, SoFi, Better.com, Wells Fargo is on there, Yield Mortgage, Citizens, City Mortgage, Bank of America, and Alliant Credit Union. Now, they are in order from rankings from 4.7 all the way down to 4.3. So these are some of the banks that are local in Michigan that are considered best. So some of them, minimum credit scores are kind of the same. I want to know, what do you think is the minimum credit score to buy a home? I just want to know. Put it in the comments. What do you think is the minimum credit score to buy a home? Because I know it's a lot of misconceptions out there. Everybody think you got to have a 850 credit score, a 700 credit score, which are great credit scores to have. Don't get me wrong, because you get the best rates. The higher your credit score, the better your rate. So it doesn't matter if you have a 740 to a 850. You're right, 620. It doesn't matter if you have a 740 to an 850. You still won't get the same rate. But yes, usually the minimum credit score is 620 to be able to get the first time home buyer programs. Some banks have it at a 640 now. They didn't went up after COVID. They have went up, but some of them are still at a 620. Now, if you have money, I don't look, I do credit, so I don't advise this, but if you got an opportunity to buy a home and you have a 580 and you have 3% down, you can buy a home with a 580 with an FHA loan. So, and a mortgage can help you fix your credit. So it can help you. So, that is something else that you can think about, but that's only if you have the money saved. Like you have to have the 3% down plus your closing costs. So that could be roughly between, depending on the price of the home, between 10 to 25 grand. That's with down payment and closing costs, um, depending on how much the home is. So, you'll have to do your math on that. But I don't advise you to buy a house at 580. I want you to buy it at a 740 to get your best rate. But if you get it at a 620, that's awesome, because you can still um, get the first time home buyer assistance programs in a lot of banks with the 620. Now, a new American funding in Michigan, minimum credit score is um, is 600. So you can have a 600 and get the first time home buyer program. So I had some of my Tennessee people. So some of the Tennessee is some of the same banks that are on here. Navy Federal is a really good credit union. Local banks and credit unions are the best. They give you the best rates, and they work with you, and they'll give you a lot more bang for your buck. And what I mean by that is um, Bank of America, Wells Fargo, and Chase are very strict on how much they will lend you based on your income. I know this for a fact because I had a Bank of America loan myself. And Bank of America tends to sell your mortgage a lot too. If you want to stay with the same people, but Bank of America has a good program. Don't get me wrong; they have a good program. We'll talk about that. But they have a good program, but they tend to sell your mortgage a lot. But I had a Bank of America loan, and they sold it a couple times. Um, and I had a client who had a Bank of America loan. Now he went in there and he came with his Bank of America pre-approval. He was ready. But the houses that he had on the list, it only gave him like 100,000. And he was like, I can't find nothing on this. And I said, well, let me look at your income and your credit score and everything. And I did. I'm like, well, this seemed a little low. He went to another local bank in Tennessee. And ended up getting $100,000 more than Bank of America gave him. Just saying. So local banks and credit unions are typically the best when it comes to home loans. Now, the only drawback with with Navy Federal, excuse me, is that they can take a little longer than usual. So just have to good. If you have a great real estate professional, they can kind of buffer that. But some of these sellers are impatient because they want their money. They want their money now. So you need to make sure that you understand, if you use Navy Federal, great loan products, great bank to use, they just take a little bit longer in the process, right? So just make sure that you understand and have a relationship, like I said, with those people. Navy Federal, if you have a VA loan and you go with Navy Federal, you don't even need your credit score. Don't even matter. You can buy a home. But see, Navy Federal don't disclose their minimum credit score because they are very flexible. But Navy Federal also has great products as far as if you're building your credit. They have great, you know, I'm drawing a blank. The secured credit cards. They have great secured credit cards because what Navy Federal does, their secured credit card turns over to an unsecured credit card. So what's that? Secured credit card meaning that you put your money up first and then use it as a credit card. So They have one of the best secure credit cards because theirs turn over in 6 months instead of a year. Bank of America is a year. I think Chase is a year. Because I had both. So Navy Federal turns over to an unsecured. You want it to be unsecured on your credit report in 6 months. But guess what else Navy Federal do? They will double it. So what they do is, well, they match you. I shouldn't say double it. So what they do, if you put $1,000 on there, and I suggested you do 500 minimum, $1,000 is better. But the more you can put on there, the better. The quicker your credit score will rise. But they will. So if you put $1,000 on there, they in that 6 months, and you do what you're supposed to do and pay your bill on time and make sure that you keeping your balances down and low, they'll give you $1,000. So you'll have a $2,000 credit line instead of that thousand when it becomes unsecured. That's gonna shoot your credit score up. So because the higher your credit lines and the less that you have reporting, you can spend. They want you to spend. You better spend because if you don't spend, they're gonna take away your credit line. They're gonna decrease it. So you need to make sure that you're spending on there. But before your reporting day, pay that thing off. So then it's still reporting that you don't have it, and you're saving on your interest as well. So that's just a slide in. But Navy Federal is one of the best banks to get your home loans. Bank of America does have a good program, and I was going to talk about that, but a lot of the local banks do as well. So Bank of America has a program called the America's Home Grant. And I guess Bank of America felt a little bad about some of the things they've done in the past. So they slid this on in there. So you can get a grant. So you don't have to pay it back. You get a grant for up to you get it for up to 10,000 to purchase a home, and they'll turn around and give you the home buyer grant program for your closing costs as well, up to 7,500. So you can get 17,500 from Bank of America. Now there are other banks, local banks in Michigan and in Tennessee that you can get $25,000 from. So that's why I said shop around, and that's including down payment and closing costs. So that's why I said shop around. Bank of America does have a good program, and Bank of America is a top tier one bank, and it's good to have on your credit report. Navy Federal is too, Chase is too. Um, I don't do a lot of dealings with Wells Fargo, but we're gonna talk about them. They have a lot of things going on. Them in regions, I'm sorry if this probably not gonna get out there as much, but Regions and Wells Fargo be having some intermingling things that they be doing, and they get caught up with fraud a lot. So to each his own. Do your homework. So like I said, always shop around when it comes to your home mortgage. Only give your information to the people you know for sure you're going to go with. You know for sure you're going to go with, because you don't. It's not bad to get the inquiries. And let me say this: it's not bad to get the inquiries. Inquiries are not bad as long as you're staying in the same wheelhouse. If you're shopping around for a mortgage, it's not going to hit your credit that bad. Maybe 2 to 5 points, maybe. Okay, if that 1 to 2. If you're shopping around for a mortgage, now if you go try to get a mortgage, try to get a car, try to get some furniture, try do all these different things in all these different areas to go get a Macy's card all in the same month or 2 months or a 2 year span, that becomes a problem. So don't do that. But if you're shopping around for a home loan, it's okay. Sometimes you have to switch banks in the process. So that's why it's good to keep your credit score up as high as possible. So because the 620 is teetering. So even though you can buy a house with a 620 with the home first time home buyer programs, I always say get your home loan, get your credit score up to 640, because sometimes you might take a hit. But 620 is the minimum if you don't have nothing and you don't have to switch banks and all of that type of stuff. So make sure that you are understanding where you are, what your credit profile looks like. If your credit profile has at least 4 to 6 trade lines on there, and it's a mix, not all credit cards, not all loans. You have to have installment credit and the revolving. Revolving is the credit cards. The installment loans are your mortgage, your car note, personal loans. Oh, secure personal loans are great for building your credit as well to buy a home, especially if you get it through Navy Federal, some of these credit unions or some of the top tier banks. It's always good to tap into those as well, because that'll give you that extra trade line that you need. So you have a minimum of 4 is what some of them are. Some of them ask for 6, but it's usually a minimum of 4 trade lines, but you have to have a mix. So make sure that you know what your income is, what your credit report has on it, and what it shouldn't have on it, and what your minimum credit score is, and shop around for these banks. Like I said, Bank of America gives up to 17,500. You have local banks and credit unions that's giving 25,000. That's in Michigan and Tennessee. Okay. And then, Wells Fargo, they have their own programs as well. So if you want to choose Wells Fargo, have at it, do what you do, but do your homework. If you missed the beginning of this video, I told you the questions that you need to ask. Go into the bank and have a personal relationship with these people. Have a personal relationship with these people, because they are going to make or break your home loan, and you don't want no funky energy. You don't want the funky energy, because if something slips up, if something goes wrong, and they might not send your paperwork on time to the underwriter. They might, oops, oh, you need this, this, and this. They might try to do this at the last minute, and you about to close tomorrow. All types of craziness. So make sure that you have a personal relationship with the person that has your home ownership journey in their hands. So, know them on a personal level. That's my opinion. Now, you can talk to people on the phone and whatever all day long. That's up to you. But I suggest that you have a personal relationship and figure out what programs that they have, how long it takes them to respond to you, how long does it take them to respond to emails, all of those different things. So like I said, I had a client almost lost a house because the mortgage lender did not check his emails for 2 weeks. And the seller was like, what we doing? I'm about to go with somebody else. And I had to go on in there and smooth that thing on out. Make my job less hard. But of course, if you get with a good, real estate professional that has relationships as well, you can always have the suggestions, but always trust your own research. That's all I'm saying. Don't trust nobody else's research but your own. Quote from Players Club. It's Players Club, but it's a good quote. But make sure that you understand the banks that you're dealing with. Like I said, Bank of America, Wells Fargo, Navy Federal, all those are good banks. I had a home loan with Bank of America, like I said, but they tend to sell your mortgage off sometimes. So you just have to realize who you're dealing with. Do your research and your background checks. Wells Fargo and Regions, they be doing some things. So you got to do your research and your homework on, like people do their research and their homework on people that they work with, especially me, because I work with the company, United Wealth Education. They were like, oh, y'all this and that and this, but they don't research the banks that they dealing with. They don't research the restaurants they dealing with. They don't research all these other people, right? So, but do your research and understand that who you're dealing with and how they deal with people, and also have that personal relationship. So, personally, the local banks and credit unions are going to have the best and the most money to give you, especially for first-time home buyers. And then when it's time first-time home buyer, it's not, let me not get that misconstrued. If you have not, in some programs, if you have not bought a house in 2 to 3 years, you can still consider the first-time home buyer and still use those programs. So you just have to, depending on what program you have, and that's another thing. Whatever program you use, you need to see how long you got to stay in the house, because some of them had those stipulations that you have to stay in the house for 2 to 5 years. Some of them might be longer. So if you don't want to plan on staying in the house longer than 5 years, then you might want to choose another bank. So you need to, whatever your exit strategy is to level up, you have to realize that sometimes these programs have stipulations. So you read the fine print, because some of them you cannot move in a certain amount of time. So some of them, like I said, it's usually between the time frame of 2 to 5 years. So if you don't want to stay in the house for 5 years, I suggest at least 2 years to build the equity up, depending on where you are. But 5 years is great because then you will build even more equity, and you can pay that you can take that money from that house to buy that bigger house. Use your assets to buy you more. Let your home make your home an asset by using it as a rental property, keeping it. So they pay for that bigger house and use the equity from that too to buy that bigger house if that's what you want to do. But that's another subject for a different day. So I think I talked for like 30 minutes. So that's enough education from the day from the classroom. Yeah, I'm really in my classroom to show y'all. It's a little messy in here, but yeah, I'm really in my classroom, y'all. So coming live from the classroom, as always, because I'm an educator and that's what I do. So share this video if you feel like this is some great. If it was some great information, I dropped some knowledge, right? Drop some hearts in the comments if this was some great information. Let me know something. I missed yesterday because I wasn't feeling too well. But I couldn't miss Real Estate Tuesday. I'm a real estate professional, so I had to come on here to educate the people, my people, right? So share this information with anybody that's looking for a home loan and try to figure out what the bank, right? What banks to use. If you have any questions, you could definitely reach out to me. You can send me a message. You can put it in the comments, or my number is on my page and in my bio. You can send me a text. You can give me a call. My link is in my Facebook and on my YouTube and in my Instagram uh, uh, profile as well. So you can research me. I'm everywhere. Now, I haven't been on my TikTok and my LinkedIn in a minute, but I do have those pages too. Have my YouTube page. So I'm everywhere. I'm not hard to find. So I would love to work with you. I can work with you all across the United States. If you want to be able to be qualified for a mortgage, if you want to be an investor, because I have a real estate investment company too. I wear a lot of hats, yes. I can show you how to do that. So, and if I don't know the answer, I'm gonna find out, and I have mentors that can help me do it. So I have a whole team behind me. So it's not just me. So I will see you tomorrow for Wealth Wednesday. Let's talk about how to get this wealth, right? Because I'm learning too. So whatever I'm learning, I'm spitting it back to you. So I bid you adieu and have a blessed day. And I'll see you tomorrow.